Hello everyone. This is a quick review of the Kotak US specific equity passive fund of fund. So this fund is holding another Nasdaq fund from iShares. So naturally I selected a Nasdaq 100 tracking index fund which is trading in India itself and compared the performance, right? And the performance, kind of checks off, right? Like I don't see a major issue with choosing either of them if you're looking into tracking the top 100 companies, right? That gives you basically exposure to the Nasdaq 100. So the name doesn't show you that it's tracking Nasdaq 100, but what it's basically doing is just tracking the top 100 index and the top 100 stocks in the US market, and it focuses on the top 100 companies, mainly the Nasdaq 100 index, right? So this is about the performance, right? So since they both are tracking the index, the performance is exactly the same. The one thing to keep in mind, like I've always mentioned about concentrated portfolios, is the concentration risk, right? So both are US stocks, US based funds, right? So you have the international exposure, so you're diversifying away from the Indian market. And yeah, nothing surprising here, right? Since these are Nasdaq 100 funds, Nasdaq 100 index, no, it should have exposure to the US market. What's the concern here? The only concern is the heavy tech exposure, right? Given the current valuation, and also the top 10 tech companies are driving huge in terms of the market cap is just going up and up, right? Naturally, the index allocation, because these indices, right, S&P 500, or in this case the Nasdaq 100, these are all market cap weighted indices, right? So naturally, if the market cap goes up high and high, right, the specific sector, especially information technology, has always not always, but for the last decade, technology has dominated the S&P 500 and the information technology sector, right? And given the current AI boom, naturally you can expect this index, the technology sector, to dominate this index. So this is something to be aware of, right? Because you're getting what, 3/4 of the exposure just to technology, right? So this is like something like an alarming bell, right? Because you're overly exposed to one sector, right? So we all know what happened in the tech crisis in 2000, where just a specific sector just went down, all the tech stocks went down, right? The entire market went down, but it was specifically to the happened to the tech sector, right? So this has a heavy tech exposure, which is something to be aware of. Finally, what I would cover is both have the same fees, right? Which is like around 0.5 to 0.6%, right? Which is on the expensive side, but you can also get like cheaper alternatives if you're going with any US based ETFs directly, right? If you're buying it from any of the international apps, you can also get it on a cheaper expense ratio, which I will show you in a bit, right? What I would like to finish this off before I move on to the cheaper version is again the concentration risk, right? So as you can see here, since this is a fund of fund, we don't have the holdings here, but the ICICI Prudential Nasdaq 100 is having the holdings of each and every stock, right? You can see the issue, right? Because which is the concentration risk. Again, the top 10 stocks here concentrates about like 53%, and all are tech sectors, right? All comes under the technology sector, and Nvidia having about 10%, right? 1/10 of your portfolio, right? So this is something again to be aware of, which is high concentration to few companies, and also high concentration to tech sector. So what I would quickly do is I will switch myself to the global region so that we can get access to all the 300,000 funds across the world, and I will also choose the QQQ ETF, right, which is the from Invesco, one of the largest Nasdaq 100 funds definitely across globe, right? Something like a famous fund, right? So again, so the performance itself kind of checks off, right? So you can get this fund expense ratio in a fraction of the cost, right? Like this is 0.2%, whereas compared to the 0.4%, right? So one thing I've done here is like I have mentioned it as like USD, right? So let me see whether the performance changes if I change the currency to INR, right? So I'll again switch to global. I'll switch the currency to INR, and yep. So once I click analyze, now I'm going to analyze the Kotak US passive equity fund versus QQQ, right? So the performance again checks off even with INR as the currency, right? So but still you're getting the expense ratio is much lower, right? For the QQQ ETF from the US market, the performance is slightly better, right? Like you get like a 6% extra returns with no lower fees here. So something to be aware of, the fees is here is like 0.4%, and also the major concern about the Nasdaq ETF itself is the heavy concentration to the tech sector, and also highly concentrated stocks like Nvidia or like Amazon or Microsoft. Yeah, that's a lot. Thanks a lot for watching, and I'll see you next time with another interesting fun. Thank you.